Scott, a very smart manager once told me that if you want to have a great year, you need to have a really terrible one the year before. Is there any truth in that when it comes to Mr. Ackman?
Well, actually, I don't think last year was his worst year on record. They actually had a pretty uneven year. I think at the back quarter of the year, like most hedge funds, a lot of the gains that they'd made over the course of the year were minimized. And at the end of in December, he lost 10.8% on his investments, leading to a negative return of about 0.7% for the year as a whole.
So let's make it clear where he's made some of these gains and why we're looking at them today of all days, because it's sort of a random day in February, but there happens to be an investor day going on in London, so that's why we're taking year to date to now, right?
Yeah, that's right.
And some of the gains have come from Chipotle Mexican Grill, which has had a huge run since the beginning of the year, up 37.5%.
Yep.
Restaurant Brands obviously was the best performer in the portfolio, 22.9%, and ADP had a nice gain of 14%. United Technologies as well has been a major performer. Where does he go from here? Does he sell some of these?
Well, I mean, we did see him trim some of the Chipotle ownership stake last year. I think he took about a $401 million share sale off, took some profit. So we could see some trimming, but as it stands right now, I think in particular, like with his recent investment in Starbucks, he mentioned in a presentation today that he still sees significant value be created and significant upside as well.
Talk me through the decision on the dividend and what the objective is there.
Well, Pershing Square Holding is the publicly listed entity in London for Pershing Square Capital Management, and it's kind of a stagnant stock and it's been beaten up a little bit. So he's been doing a share repurchase program that's helped kind of drive returns as well, but they want to broaden the investor base, and by creating a dividend, it's a small dividend, but still it amounts about 2.5% yield. So they're creating this to bring in investors that might be interested in a dividend stock.
Now, you also had a nice little profit from selling Nike shares, but he maybe sold them a little too early. He could have made a little more. But what do you think is his next move? He's going to be at the Active Passive Summit here in New York coming up, so we may hear about a new position. But is he now next banking on housing finance reform? Is that where the next part of his return?
Well, he's always said that there's a tremendous upside on Fannie Mae and Freddie Mac if these reforms come through, and they've held that those stocks for a long time now, so they've been waiting for those returns to pan out. But I would say generally the whole approach has kind of changed for Bill over the last little while. He's obviously stepped back a little bit from the being in the media spotlight, and taken kind of a smaller, more investment-centric approach to Pershing Square.
Yeah, and some of the other things he points out in the presentation are that they've reduced headcount to 38 from 74. 4 new investments, and by the way, Hilton Worldwide is doing very well today. So, obviously he hasn't completely given up on that investment either.
Yeah, it seems that there were 4 new positions in 2018. All of them seem to be performing relatively well. United Technologies is also one that's going through a major transformation. So is Lowe's. So we'll see how that pans out over the course of the year.